Hello traders, welcome to the video. In this video, I'll be showing you how you can combine moving average with MACD to make money out of the volatility index market. This strategy I'm about to show you works for the forex market, for the jump index, step index, and also in the boom and crash. Don't worry, I will show you samples on how you can trade this strategy. It is very accurate, but it is not a 100% strategy. It will take you time to understand how it works, and you must know that it works on all time frame. But what I find to be very effective is the 4-hour time frame. Although it also works on the 1 hour, 15 minutes, 5 minutes, but the 4-hour time frame is very effective. So if you take your time to study this strategy, you will see changes in your trading journey. And the good thing about this strategy is that you can cash a longer move, but we are only sticking to times 3 of our risks. So if you risk $10, we times 3 it, $30, then we are out of the market. So if you look carefully on my chart, this is the 4-hour time frame and this is the volatility 25, and here on my indicator I have MACD and also the moving average. So before I show you how this strategy works, let me quickly show you settings to my indicator. Click on this indicator icon over here. As said, I have just MACD and moving average. So to select the first moving average, click on this F icon on the main chart, moving average. Make your period to be 100, shifts to be 0, method to be Lillian weight, apply to close, style, 3 pixel, and select color of your choice. After that, click on save. For the second moving average, click on the F icon on the main chart again, moving average. Make your period to be 10, shift to be 0, method to be Lillian weight, apply to previous indicators data so that it will work along with the previous moving average that we added. Styles, make it 3 pixel and select color of your choice. After that, click on save. For the MACD, click on the F icon on the main chart again, scroll down a bit. This is MACD, click on that. Make your fast EMA to be 12, slow EMA to be 26, MACD SMA to be 9, apply to close, styles 4 pixel and select color of your choice. After that, click on save. If you follow my settings correctly, your chart should look exactly as what you see over here. So you must know that you can use this strategy to buy market to the upside. You can also use it to sell market to the downside. So over here, what are we looking for? First thing we want to see the MACD. This black line that you see over here goes below the 0 level. So you can see over here, this is 0 level, demarcating the up bar from the lower bar of the black line. So you see this, then you see it coming down. So once you have it coming down, then you want to see this red line over here entering into the black. Once you have that, then you come to your main chart and then you want to see the purple moving below the green. So here you want to pay more attention to the purple line. If you look carefully, you have it here. Then you have the purple go below the green around this point. So once you have that, you will enter your sell immediately. Then you put your stop loss either above the moving average here or above this high. Entry here, stop loss here. Let's say you risk $10. Then you will target times 3 of the amount you risk. You will take your profits around this point. So there is also another way that you can close your profits. You can also close your profits once you see the green go below the purple. But times 3 of your risks is the best way you can actually make more out of this strategy. Don't worry, I will show you some condition why I said so. So here you can see that there is no cross, so you can have another entry at this point. Market generated down bar around this point. The red MACD goes into the down bar. You have the purple goes below the green. You will enter a sell again. Stop loss will be above this high or this high. Then you target times 3. You can see times 3 will hit around this point. So for the second entry, let's say you have your entry here, stop loss above here. You can also hold your trade until when you have a cross at this point. So if you look carefully, you have a cross, the greens go below the purple, then you can close your trade. So it's also nice, but most times markets may not give you this type of long move. You have a buy here. So once you have the cross, you look at the MACD immediately. So in the MACD, you have the bar going to the upside above the 0 level, which is telling you the market is likely to go in an uptrend. So you have the cross completely around this point. You enter a buy, stop loss will be below this low or the moving average. It depends on you, but the safest place to put your stop loss is around this point. So if you use this point to put your stop loss, You can target times 2 of the amount you are risking. Let's say you risk $10 here, you can target $20. But if you have a tighter stop loss, like entry here, stop loss below here, you can target times 3 of your money. So you see over here, your times 3 will hit around this point. So if you say you want to wait for when there is a cross, you still go back on a drawdown, lose some of your profits before you close around this point. So let me go to volatility 75 and also show you an example over there. So here in volatility 75, it is the same thing that we are looking for. So first thing we want to pay attention is the MACD. We want to see the MACD generating a black bar to the upside above the 0 level. So over here, we have it. Then we have this red MACD line enters into that point. Then we wait for when we have a visible cross between the purple and the green moving average. Entry here, stop loss below the moving average. Then we target times 3 of our money. You see over here, we can have times 3 around this point. Entry here, stop loss here, then times 3. Then here we also have another entry generating up bar. Purple goes above the green, confirming uptrend. Enter a buy, stop loss below this low, below the moving average. Then you hold your trade for times 3. Then you close around this point. The same thing over and over again. So let me show you another example in the crash 1000 market so that you can understand better. This is a sell opportunity over here. So we see this MACD generating a down bar to the downside below the 0 level. So we have it here. Then we have the purple goes below the green moving average. We enter a sell here. Stop loss will be above the swing, above the moving average. Then we target times 3. We can also hold our trade if you want. So if we hold our trade, we only wait for when there is a cross. So here we have a cross, then we close our trade. But like I said, the times 3 is better. So it is the same procedure over and over again. Like I said, it is not 100%. You will take some couple losses. But one thing you should know is that you have to process your mind to know that losses is also part of the game. You cannot be perfect all the time. Even if your analysis and your strategy is 100%, you are human. You can also make mistakes that can lead to you taking a loss. And let me quickly do a quick analysis for you guys so that you can understand that you don't need 100% win rate to be profitable in the forex and synthetics market. Let's say you have a $100 account for a start and you want to be risking $10 per trade, and you only focus your attention on 50% win rate. That means that out of 10 trades that you will take with a $100 account, you will lose 5 trades and you will win 5 trades. If you win 5 trades and you only focus on times 2 of your money, that is 2 RR, for $10 you make $20 each. $20 times 5, $100. Out of this $100, you lose 5 trades. That is $50. $50 with your initial $100 from your capital. So that is $150. So with a 50% win rate, using just times 2 of your money as a target, 2 RR, you will make extra 50% of your money. That is what you should know. So you don't need to get that only grill strategy. You only need 50% win rate, 2 RR, to make a lot of money in the synthetics and the forex market. So you can combine the higher time frame with your analysis so that you will get a more perfect entry. Those who have watched my video knows how to do that. So just go to your daily time frame or the weekly time frame to determine the trend of the market. Then you can use that opportunity to come to your 4-hour time frame, 1-hour time frame, and get a more perfect entry and reduce your loss. After this, I want you to go back on your chart, backtest this strategy. You can go on your demo account to test this strategy in a live moving market for at least 2 to 3 weeks. So if you test it, Then you see how profitable you are, you see how accurate you are with your entry. You can decide whatever you want to do with the strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, and turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.